Hello, this is Group 1. We are Rowan, Kiana, Maya, Haley, Susan, and Soraya, and our project focuses on the cooperators. The Cooperators is a Canadian member-owned financial services cooperative that has been serving communities since 1945. It was founded by a group of farmers and cooperative leaders who wanted to create fair and accessible insurance options at a time when rural Canadians struggled to get coverage. The Cooperators continues to operate with a strong social purpose, focusing on financial security, sustainability, and community well-being. Its multi-line insurance and investment solutions are built on the belief that communities are stronger and more resilient when they work together. Next slide. The defining feature of the cooperators is its cooperative ownership structure. Instead of being owned by shareholders, it is owned by co-ops, credit union centrals, and farm organizations. This reinforces a long-term community-first orientation in its decision-making. The organization's modern strategy emphasizes sustainable investing, climate resilience, and social responsibility. The Cooperators positions itself not only as a financial services provider, but also as a community partner. It focuses on personalized relationship-driven service and invests in initiatives that support environmental sustainability and social well-being. This dual role, serving clients while strengthening communities, is central to how the organization differentiates itself in the financial services sector. Next slide. The Cooperator's mission, vision, and values guide how it serves Canadians. Its mission is to provide financial security for Canadians and our communities, reflecting its cooperative roots and commitment to collective well-being. Its vision is to be a catalyst for a resilient and sustainable society, emphasizing long-term community strength and environmental responsibility. These commitments are supported by three core values. The first is responsibility, which focuses on balancing care for society and the environment with sound business practices. The second is integrity, emphasizing honesty and respect in all relationships with clients, members, employees, advisors, and partners. And the third is inclusion, reflecting a dedication to embracing the diversity of all Canadians and ensuring equitable access to financial security.
Key industry trends that would impact an insurance company, such as Cooperatives Group Limited, can be identified as the movement away from traditional societal norms, the integration and easily accessible use of AI and social media, and the environment, more specifically global warming, climate change, and the natural disasters that follow. According to a cooperative survey, they reported that old rules simply do not fit the economic reality today. Younger generations who have followed in the older generation footsteps and advice has led them to make poor financial decisions, leading to financial loss and regret. This leads insurance companies to believe that the older ways and advice do not fit the narrative nor are they applicable to today's economic state. Additionally, the survey explores Canadians whom in which have asked, taken, and acted on advice from social media and AI, which of course misled them, and they are now paying the price. Referencing and referring to AI and social media is definitely a new trend which is occurring in this industry, and it is extremely important for companies in the industry as well as people looking for insurance coverage to be aware of misinformation and to adapt. The rise of global warming and climate change increases the risks of natural disasters, which wreak havoc on personal assets such as homes and automobiles, while unfortunately also impacting lives and travel plans. This means that as an insurance company, Cooperatives Group Limited must experience a higher volume of claims as climate change and global warming continue to rise. As natural disasters caused by global warming and climate change occur more frequently, more people are turning to insurance companies to insure their personal assets.
When looking at the strengths and weaknesses for the cooperators group, we look at the SWOT analysis and the internal factors. According to their internal metrics, they are on track for employee engagement, and they're also on track for client growth within the company. They have strong profits, over 71 billion in assets as of 2024, and they're leading the market position as a well-known insurance company. They offer diversified products and services in their portfolio, including insurance, investments, and group and individual policies and products. Their highly specialized underwriting team is trained to scrutinize and write good business, and a high volume of business is going above the expectation. Also, one of their strengths is the diversified investment portfolio. They had a growth of 1.2 billion just in revenue from 2023 to 2024. Their conservative and responsible investing ensures a steady income stream even in volatile markets. When looking at the weaknesses, really it's the aging workforce that causes an increased need for knowledge transfer. There's an increased need for technology and tech-savvy employees, and specialized and highly skilled employees cause talent gaps. Their P&C segments, which is the property and casualty segment, reported a ratio of 1.2 or 102%, which is actually showing a 2% loss in their underwriting. The high expense ratio of 28% results in a weak operational efficiency, making an underwriting problem. The weakness in the operational efficiency, making underwriting losses, not achieving community contribution goals, and low engagement scores for advisors are some of their weaknesses.
For opportunities, technological advancements can be helpful in cost-saving measures and increasing productivity. New technologies will also help to cover skill gaps in underwriting and other insurance areas, and these can include new AI technologies and platforms. There are also generative AI platforms that can be used for client self-service and employee self-access, which can increase productivity and security for the company. In 2025, there was the acquisition of two financial firms, which can increase revenue and existing client base. Increased population leads to an expanded workforce with talent from multiple areas, leading to growth and diversity in the workplace. Increased population and product growth can lead to growth in general insurance needs. And finally, a transition to the international financial reporting standards brings many opportunities, such as access to more data, the creation of partnerships, and it can create better functions that lead to positive change and growth. For threats, there are increasing numbers of insurance claims due to rising natural disasters and climate change related issues. Global political tensions may also affect stability in markets and investments, and fluctuating interest rates are also a factor against market stability. Increased cyber threats may increase insurance claims and might cause a need to reevaluate the insurance policy. Competitive technological advancements can cause greater competition with other insurance and financial sector companies. There's also AI ethical compliance, claim, and regulatory issues, as well as the concern for carbon footprint and privacy acts. The potential loss of highly skilled niche talent employees can be a threat to the business. And then finally, many regulations are being shifted and they must adapt due to the legal nature of these sorts of companies and their need to adhere to government regulations.
Building on our SWOT analysis, I'll highlight three key external factors that impact cooperators, including the economy, technology, and demographics. As we learned in the course, environmental scanning helps organizations understand external trends that shape strategy and HR planning. First, the economic environment strongly affects the insurance industry. Inflation, interest rates, and climate-related disasters can increase claim costs and impact profitability, while economic uncertainty may reduce demand. From an HR perspective, this can create budget pressures and requires more strategic workforce planning. Second, technology is rapidly transforming the industry. Digital tools and AI are improving efficiency and customer experience, but they also require new skills and role changes. HR must focus on reskilling, change management, and building digital capabilities. Third, demographic shifts are also important. An aging workforce may lead to knowledge loss, while younger employees value flexibility and purpose-driven work. This means HR needs to focus on succession planning, knowledge transfer, and flexible work practices. Overall, these external factors show why proactive environmental scanning is critical to helping cooperators stay resilient and future ready.
Over the next 5 years, climate change and AI adoption are expected to significantly reshape the Canadian insurance industry. So this scenario analysis is going to look at two cases. The first being the most desirable case, where technology and climate risks are managed successfully, and a least desirable case where environmental and operational pressures increase. In the most desirable case, climate risks become more predictable because of improved analytics and AI-powered underwriting. Cooperators successfully integrate AI tools into claims processing, fraud detection, and customer self-service programs. However, some challenges are that employees would need to learn new skills quickly. The organization must manage ethical, privacy, and compliance concerns related to AI while also keeping employees engaged during the change. The company does have some strengths as well, including a strong underwriting team, a stable brand, and a culture that supports internal promotions. At the same time, weaknesses include an aging workforce that could resist new technology, engagement challenges already existing among advisors, and there are talent gaps in AI and analytic roles. Next slide. And in the least desirable case, climate-related disasters increase, leading to higher claims, underwriting losses, increased regulatory pressure, and cybersecurity risks. They may also struggle to attract employees with strong technology skills. From an HR perspective, this creates a few challenges. Financial strain limits organizational flexibility. Employees might experience burnout, and there might be shortages of workers with expertise in certain roles. Employee morale could also decrease due to this pressure. Cooperators would still benefit from strengths such as a wide range of offered services, stable financial resources, and an established market presence. However, weaknesses such as high operating costs, slow technology adoption, and the risk of losing organizational knowledge through retirements could arise if they're not addressed.
HR planning is forecasting an organization's future workforce needs. HR professionals who understand the organizational needs can create the kind of HR competencies that build competitive advantage. The HR planning process is cyclical in nature, starting with establishing mission, vision, and values, but it must also ensure that those policies and goals and the strategies that are implemented support the company and their mission, vision, and values. However, an organization cannot implement a strategy if it does not have the necessary human capital. How an organization performs is directly related to the HR planning strategies in place. The strategies that find the right people at the right time with the right skills and place them in the right place. In other words, attracting, retaining, and motivating. These HR planning, monitoring, evaluating strategies will help to continually align people and their performance back to the organization goals. It can help with determining any skills gaps that need to be addressed, offer career development goals, minimize turnover, and anticipate upcoming changes that need to take place.
Based on the threats and weaknesses that the company faces as an insurance and financial institution, the organization should be using HR planning in order to prepare to be successful against these threats. In terms of weaknesses internal to the company, one way Cooperative's financial group should plan to prepare for success is to review their high expense ratio. They can look at where they are able to reduce costs and offset the high ratio. But even more importantly, they should possibly look at what is causing the underwriting losses. For example, asking the questions, can the issues be resolved with training or attracting the right niche talent, or do the acceptance guidelines allow for taking on a not so ideal book of business? In terms of threats, it is very important for the company to be monitoring the environmental factors that may be affecting them, such as technology and politics. Technology is a huge upcoming challenge and opportunity for companies, considering what AI can bring to businesses. But it's important to effectively plan for these expansions as they have their own level of problems with them, such as ethical use and privacy. In order to prepare for success in these areas that are new, cooperators could implement a change management model to help adapt to emerging threats and set the business up for success. Being prepared to face emerging threats in the industry will also give them a competitive advantage over other insurance companies that face the same threats. The change model would include a plan to implement new technologies as well as prepare policies and plans around global political events that may be affecting this sector greatly. This will require organizational learning and affect all employees to make sure everyone is on board and can implement these plans to ensure a successful completion of the plans. There is much that goes into HR planning, and it requires taking active steps to make changes in the work environment while also creating goals that benefit the company and cater to its values. It's important to be aware of threats to a company and make these plans to ensure the company is able to be successful amidst the hardships of running a business and come out on top over its competitors.